Good morning, guys. How are we all doing? So happy Monday, everybody. How are you guys all doing? I think I'm gonna have to dust off my desk this morning. Look all that dust. But yeah, happy Monday, everybody. Hope you guys all had a great weekend. Welcome to the new trading week. So if you guys don't mind smashing that like button, we shall go straight over to those Bitcoin charts. So Bitcoin on the 4 hour, as we were talking about yesterday, what I kind of wanted to see, just for pure aesthetic reasons, was we got rejected at this at the basically resistance level around the 52,000. And let's just straighten this line up, and then we came back, and we are currently back testing the mid level line that we drew in, basically the mid range between obviously the midpoint pretty much of this range. Back testing that. So what we now want to see is this to get supported here, move back on up, and take out obviously this resistance, and then populate price action in this area. So obviously we are at the point where we need to get supported. Maybe we trade sideways for a couple more 4 hour candles, and then hopefully move back up. But obviously if we do lose this and come lower, this candle closes. This candle's only halfway through now. But yeah, if this candle closes anywhere like above the line, and then the next candle comes and takes out this low of like 49, about 49,300, then yeah, we will potentially see a move back down to the 46, 47Ks. That is not necessarily what's going to happen. Well, obviously, who knows what's going to happen, but that's not necessarily what I think is the most likely scenario. I think we potentially do get supported here, come back and test this and try and break it. And then if we do fail to break it this time, the next time, if this is what happens, and we get rejected, I think then potentially we will lose this horizontal, and we'll be coming down for a test of the bottom side. But that is pure speculation into I don't. It's hard enough predicting the direction up or down from the point in the market is at any given time, let alone trying to predict up to a level and then down from that level. I mean, that's just ridiculous. But hey, anyway, let's give it a go anyway. Over to our Ethereum Bitcoin pairing, our all important for me anyway. We had the nice move up to our horizontal. Got rejected on the 4 hour 9, pulled back. Actually, this pulled back nicely to see. You can see the actual, well, roughly this level here. Probably front ran it a little bit. Then we did break back above the horizontal, our important horizontal. Currently holding up there. You could maybe say this is somewhat of a back test of it. I probably wouldn't say it's a proper back test of yet. Maybe we'll maybe we will consolidate above this horizontal before hopefully making some progress to the upside. But what I will say is that this is looking a lot better than it was when we were basically down here. We are looking a lot better here. And then this is the level where we take this out, which we drew in yesterday. We take this out, then we will be going to the moon basically. But obviously that is quite far away from price action. I mean, if we just want to look at it in percentage terms, where that is from price action right now, 15%. Remember, that's 15% against Bitcoin. Let's look at the USD pairing. That pretty much came up to exactly our horizontal. This is the horizontal we were talking about for getting back above here in the USD pairing. Then we will probably continue onwards and upwards. Nice rejection. If I straighten this up a little bit, you probably see it's basically bang on. Nice rejection there. So really we want to get back above here, and then I think it will be all bets are off, and we are basically going to the moon. We'll extend this along because this may be important, maybe a level that gets respected on the way up for a small pullback. But I think basically getting above this level here, which is what the level we were talking about, about 1750, we'll be onwards and upwards. So that is great. Let's have a look at the traditional markets. DXY has obviously hit this target again on a 4 hour. Is it a 4 hour 9? No, we pulled through the 4 hour 9 at the moment at present. DXY is now starting to turn the heat up on people now. Obviously, continuing to make progress up here into the 93s. This will start to worry people. Obviously, the problem we got going on is this 10-year. And right, we'll have a real quick discussion about this 10-year. Basically, stock markets aren't collapsing yet. Based on this, because basically there is a narrative going around the financial sector around Wall Street that that basically it's fine for this 10-year to rise, interest rates to rise, whilst we are basically having a reflation, so a reflation of the economy, and that is opposed to just inflation. So if the bond yields are going up because of reflation, then that is good. If the bond yields are going up purely because of inflation, then that is bad. Right, so what is reflation? Reflation, basically, they're basically saying that their GDP is going up, and we're talking about nominal GDP. So nominal GDP is basically the real GDP plus the inflation. So if you are understating the inflation, the level of inflation, because you basically manipulate how statistics are compiled, i.e. the CPI is compiled, you just forever change the basket. Hedonic price adjustments, they're called, just to basically manipulate the figure down because you want the figure down. And also, if you are full on manipulating the Treasury inflation protected securities, the TIPS market, basically the Fed is basically buying them to manipulate that price signal for inflation. So if inflation is in fact higher, then that therefore implies that that basically the actual real growth is lower. So whilst you have basically the market potentially, and I think is, mispricing inflation due to obviously the manipulation of how statistics are compiled and obviously actual signals in the market, then obviously you think growth is actually higher than it is. GDP is actually higher than it is real GDP, and if real GDP is higher, then we have basically a reflation, reinflation of markets and the economy. But if inflation is a lot higher, then that basically means the actual real growth is a lot lower, if even existent at all. In which case, you've just got markets going up on inflation, and that is not good. That is not good for basically the economy. It just basically tells you that the economy isn't growing, and basically stocks are basically doomed. And obviously, as it keeps rising because of inflation, then we are gonna have some serious problems, and that, my friends, is basically what I am pretty certain is happening. So ignore the basically the reflation. Basically they're trying to claim that it's the base effects. Basically gonna are obviously signaling we are actually having economic growth in real GDP. I don't think we're not having growth in real GDP. The nominal GDP is going up because the inflation element is going up, but that inflation element is not getting the actual level of it is not correct what the market is believing it is. Anyway, so obviously at the moment stock markets are not and basically all markets are not panicking too much over this, even though this is a pretty incredible and damning move. I mean, if you just think about it, if corporations are saddled with debt, but they're going to make more money because the economy is growing, make more money, then obviously their debt costs are going up, then obviously they're going to do fine. But actually, if the economy isn't growing and their debt costs are going up, then they go bust, don't they? They're done. So that is to put it simply, if the economy is not growing but their debt costs are going up, they are basically screwed. But if the economy is growing and their debt costs are going up, but obviously the economy is growing, so they're making more money, so they can service those debt costs and make more money, then obviously they're fine. And at the market at present, that's what like, as hilarious it is to say, because I think it's funny that the people think that. That's basically what the market is pricing in, where in reality, let's face it, the economy isn't really growing. Inflation is all that is basically driving interest rates up, and that inflation is going to basically increase their debt servicing costs whilst they're not making any more money because the economy isn't growing. Therefore they are screwed. Anyway, right, that is enough of that. Let's have a look at how is silver doing. This is why there's obviously big opportunities in gold and silver, because obviously they are that whilst the market is basically going along with the fact that inflation is basically not as high as it is, then obviously there's no real reason for precious metals to go up. But when it realised that inflation is higher and actually the growth is lower, then obviously there's a reason for basically metals to go up. So right, let's have a look at the stochastics. Are they signaling? Well, that's not very straight, is it? Are they signaling an ability for basically I'm just straightening this out, for basically Bitcoin to get supported here and go and carry on upwards and break this resistance? Let's have a look. 4 hour would not signify that. 4 hour would say that we are going to give this a proper stern test, maybe even some lower price action. But the more important ones possibly are the 10 hour, which, as you can see, is moving up nicely. 12 hour is moving up again also. Daily is moving up nicely too. 2 day losing obviously its downside momentum. Well, and these guys are basically doing their longer term thing. So we'll just basically ignore them in the context of basically the next $1,000 or $2,000, $3,000 move in Bitcoin. But yeah, so as you can see, 4 hours obviously is indicating potential sideways here. You would expect 10, 12 hour and daily to basically hold off that 4 hour and eventually turn it back around, and then at which point we will then probably get the nice move back up to this high, and well, like I said, potentially break it. I think we've got a better chance of breaking it than obviously we did at this point. I wanted to see the pullback and then the move up. But yeah, we shall see. But either way, I think it'll be good to get us up. I think it'll be good enough to get us back up to test this high, and that will obviously be the third time, won't it? It'll be 1, 2, and then third time, and then yeah, potentially we break through. So that would be my guess based on stochastics. Obviously at any point this 10-year can uncontrollably sell off, and the market can all of a sudden realize that we're not reflating, we're inflating. At any point that can happen. That is literally just ticking away in the background. Who knows? But anyway, so yeah, that is it, guys. Remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I'll speak to you guys later on today.